All right, guys, we're going to dive into it quickly today because obviously the Fed has made a move finally after a very long time of holding rates on a higher for longer strategy that Chair Powell has been on. And of course, yesterday, it was no surprise we got a quarter basis points or quarter point, 25 basis points in terms of a cut. And I wanted to bring in one of our new analysts that we love on the show. And that, of course, is Rebecca Walzer coming in from Walzer Wealth Management. Great to have you back on the show, Rebecca. How are you?
I'm great. Thank you so much for having me. Love to be on. Thank you.
So, Rebecca, you get a chance to work with a lot of high net worth individuals, a lot of probably family offices, et cetera. What does Walzer Wealth Management focus on mostly in terms of how your investor profile is put together?
I really wanted to build a different, or an RIA, Paul, and I really wanted to build a different kind of advisory because I worked on the commercial finance side my entire career before I opened my own practice. And basically, I saw what the retail advisors do, and I was like, kind of horrified. So we really wanted to be an outlier. So I take my tax law experience and I really make sure that our high net worth clients not only are looking at income tax, but also estate tax planning, legacy planning. Obviously, as a tax background, that's really different. But also, I have a very specific global macroeconomic focus with my, advanced degree from the London School of Economics, and that's really where my passion is, economics. And really, it's the best time to be in this space because we are in the middle of a global currency transition. We are moving to blockchain currency. It is underway as we speak, as you know, and that is going to end paper currency as we know it. And it also changes a lot of things, especially now with stablecoins and the Genius Act, which I think is integral to how they're going to be moving us off of the paper dollar and really onto a new system. So it's a very fascinating time, and I'm so glad to be living through it.
All right, so you had a chance to see Chair Powell yesterday make his move. Many people would have thought during it, as we were live streaming it over on PBN, the interesting point around that was that I think a lot of people thought it was a little bit hawkish in the sense that he was being still very reserved and a little cagey on his plans going forward. He gives the quarter basis points. Do you feel like this was an olive branch out to the administration, or do you feel like this is really a Fed strategy?
I feel like he was backed into a corner and felt like, okay, there is data to support it. He obviously talked about the balance has shifted more towards the labor market as opposed to inflation. But I do feel like he was just backed into a corner and really had no option. I mean, if he could have probably gotten away with no cuts, he might have tried. He would have tried. But that's why I said to you, with the first time I was like, there's no way we're going to get a 50 because that's going to send a message to the market that Powell doesn't want to send, and that he was too late, basically, right? And so he wasn't going to send that message. And you could see how it was hard enough for him to give it 25 bips.
Yeah. He was really struggling, even though we had 11 governors that voted it on. So
yes, I mean, and the only dissenter was the new one. Trump just got in. So
it's kind of interesting when you look at this. Now, granted, listen, this is I guess a serious moment now because we are at an inflection point. If you look at current inflation, this of course is the Truflation data coming in, and I'm going to highlight something here because this was back in April, as you guys can see here. I'll zoom in on that screen, but as you'll notice right here, we're talking about right there. That was 122 on April 6th, 1.22%. And then if you look at where we are now, we've continued to track up to where we've started to clip just above 2.3, almost 2.3, setting at 2.26 right now. With all of that in mind, the jobs numbers coming in absolutely abysmal. And even now the Fed recognizing we have a job problem. That always tells me it's too late if they now recognize it. How does he play his cards out? Because inflation looks like it could be going up. Now we have the second part of the dual mandate also rising, which is unemployment, and lowering of the job opportunity. How does the Fed play this? Which is more important?
Well, I think Powell obviously broadcast yesterday that the balance had shifted more towards the labor, but I
Yeah.
thought it was really interesting and it was a big tell. His point where he says the labor the issue is because of immigration, is that the less amount of immigration coming in, there's not enough new workers come in, which is very interesting because if you look at the labor participation rate, you actually see that domestic Americans participation has actually trended up, meaning that
Hmm.
there are more people that are non-immigrants actually moving back into the labor force and
Right.
seeking a job. So I thought that was really interesting that he pulled out that and said that the reason
Political,
that, yeah, I
of
was
course.
like, wow, that is wow. Like, so our border is closed and we don't have a lot of new workers, and this is the problem. Because if that is what he's actually intending to broadcast, then how does he do anything to help with his policies, right?
Yeah,
Because
it
he,
completely eliminates it.
he
Yeah.
can't he can't open the border in his position like it was under the Biden administration. So if the border is going to remain tighter as it is now under Trump, if Powell is forecasting that the labor problem is immigration and the border not being open, then how does he do anything to impact that and fix that?
I
That's
just don't see how that could have been the case because when you look at the BLS adjustment,
yeah,
this goes back a full year
exactly.
of almost 1,000,000 jobs. So it just doesn't compute in the sense of when the jobs were lost, the fact that they weren't reported correctly, the Fed's using bad data.
Mhm.
Now the Fed is now countering back to this point. It just feels like this is very discombobulated in the sense of no management and no direction. How do you think they play out the next meeting?
I mean, I definitely think that at this point that we are going to see an October and a December 25 BIP cut. We won't get
Okay.
to 50 unless we get some massive major economic news that would indicate that Jerome Powell has an outside independent reason to move the needle to 50.
Right.
So I would expect two more cuts at the 25, just like we said before. And then I would expect an additional cut in January at the 25. And then I don't know because then you're getting into getting really close to the May ending of his tenure and
Yeah,
the
deadline.
yeah. So after January, the March meeting is going to be definitely different because that will be the sole meeting before, basically his
It's his
last.
last meeting. Yeah.
Exactly.
Yeah.
So he's got a really tough road here. I don't think he really did himself any favor yesterday. It did seem very discombobulated. That is exactly the right word to describe it. And it wasn't a map out of where we're headed. It was data dependency again, looking at the obviously the labor as more important. I did notice that PPI came in and reduced by 0.1%
Mhm.
for
Yeah.
August unexpectedly. We actually expected it to tick up, and it actually went down. PPI is a producer price index is a leading indicator, unlike CPI, which is a trailing indicator, because obviously the producer price comes first and then it gets passed to the consumer. So the fact that
Right.
we had PPI unexpectedly drop is a good thing. However, as soon as the Fed goes accommodative again and things become more, the second,
Mhm.
Paul, that they cut rates, interest rates on credit cards come down some. And so people will pick up their purchases. And that, again, is inflationary. So
Yep.
it's a catch 22, and I wouldn't want his job.
Well, yeah, and you're looking at what could be one of the very few times in history where we've had both of these economic conditions barreling toward a all-time high in the stock market.
Exactly.
Okay. And if you kind of consider where the S&P 500 is, Bitcoin as we're recording this morning, 117, starting to edge back up, maybe towards an all-time high. Almost the entire market is green right now after yesterday's response. And now you have this right here, which starts us to move into uh, the real estate market. Bank of America says they see a path to 5% mortgage rate. This would be a big deal if we get a 5% back. If the Fed pulls off a couple more things, and mainly what they're talking about is some additional cuts, but also the ability to manage this whole issue with inflation. How important is the real estate market right now for the economy?
I mean, real estate, besides our services sector, we need people buying services. We're a 70% consumer driven GDP economy. So
Yeah.
Real estate, I would say, is the linchpin underlying all of it, both on the commercial side and the obviously residential side. And so that's why shelter is so much a part. Even shelter, part of CPI, was one of our largest upticks on CPI just in August, because shelter costs are 4%, increasing month over month. I mean, that is not 4% a month, but 4% on an annualized basis. That is a massive problem. So shelter is obviously a big part of inflation, Paul, as well as the fact that it's a big stimulus, because the house is a center of all of the services market, all of the Home Depots, the Lowe's, the
Right.
appliance. That it's such a reverberation throughout the economy, on housing and on real estate. So, and of course, then you have all the investment in real estate. You have all of the commercialized investment. You have a lot of what we've seen in the last 4 years, which would be a lot of these multi hedge funds buying out neighborhoods and renting houses. So we've got a new kind of way of even having not home ownership but leasing ship of home ownership. I mean, it's a
Well,
new world that's coming.
yeah, and I think the point, we draw a lot is this an era where the younger generation, I get it that the boomers, Gen X, my generation is most likely going to continue to invest in property. Um, but once you start to go in the millennials and the Gen Z, I mean, the opportunity for them to reach that is very difficult.
Yeah.
Is digital and are digital assets maybe the route to the new American dream? If you're going to own an asset, which is what you're trying to do, get to a point where you've got an asset versus a debased dollar, does that start to shift the dynamic as we start to see wealth transfer? You're talking to a lot of high net worth individuals right now, probably boomers that are saying, how am I going to move this money into my family, my children, the rest of my family, et cetera? What strategies are they going to take? Because this gets a little bit different in the future.
Yeah, and I mean, you probably would know, even maybe more than me, Paul, what the uptick is on, or the take up percentages on boomers and blockchain cryptocurrency. I mean, a lot of them are still suspicious. Like, how do I
Yeah.
really know I'm buying something, and how can I know for sure that this is going to get passed down? And of course, you have all of the lost wallet, guy dies and all the keys are
Yep.
gone. I mean, and so you hear the horror stories and one anecdotal story, and they're like, oh, that I don't want to do it. But yes, there is absolutely no doubt that the newer generations are looking at digital assets as tokenization as a way forward for wealth, instead of having to come up with a 20% down payment and get their lawn mowed every single week
Right.
or month. So absolutely, home ownership is changing its face for sure.
Yeah. Well, and the point to your suggestion there is that we're seeing, actually we are seeing a little bit of a shift in the business owners and high net worth individuals. We do a seminar, and it's infamous here in South Florida. Mostly independent business owners, under 25 employees. Okay, so in most cases, lifestyle millionaires, most likely, if they own a business like that.
Sure.
And the conversations that I have, all I'm doing is teaching about crypto and digital assets in general. And I'm finding quite a bit of interest, uh, at least in the areas of where they don't necessarily want direct exposure just yet, but they do like this idea of the ETFs.
Yeah.
They like the idea of these, traded products that are around the technology. They might have, Bitcoin mining and AI and, some of those ETFs that are out there. I think at VanEck, we just had Siegel
Mhm.
on talking about Node, which is doing that. And now we've got the XRP ETF getting ready to go live today.
Wow.
You've got the Doge ETF going live. I mean, there's quite a few, and then many more that are lined up. Canary Capital is getting ready to launch one. So would that maybe be the way that wealth transfer could go and still stay in blockchain? What's your theory?
I have such a mixed feeling about the democratization of the blockchain currency through ETFs, because obviously, as you know, Paul, its entire existence, its entire origination came from the idea of getting around centralization
Yeah,
and
get
to
away from it. Yeah.
DeFi, and the cold storage wallet at home, like everything, protected from fire and everything. I mean, that was the love, right? That's the passion. that's where this started from. And it's ironic that it had to be democratized to be accepted by the masses, but it does lose some of that. You lose some of that control. And I do love ETFs. I mean, I'm a huge gold bug, and we actually love to use gold ETFs, silver ETFs, and they're actually taxed as if you own the asset class. That's because of the pass-through nature of the ETF. If it's only holding that one asset. But the bottom line is, it's great that it has made it palpable for all of these other people that otherwise wouldn't have done it. But
Yeah.
as long as the stalwarts that are using it for its intended purpose can still use it without using it through, a commercialized entity like that, I would like to still believe that its original purpose is always going to be intact for those that want to use it that
For
way.
DeFi, yeah. Which is the thing that, we coach so much is, self-custody or at least going into an exchange and buying the direct asset.
Mhm. Yeah.
Which brings me into something that's kind of interesting. This was news that just broke. The UK is now announcing a closer cooperation with the United States on cryptocurrencies. And this makes me feel good and bad at the same time. And to your point, kind of following along on that, do you think we are finally at a space and a time where crypto has grown up? It's now at the big table, as they say at the holiday time. You're no longer at the kid table. You're at the big table, but the problem is that you barely get a chance to really contribute. Do you think crypto is going to take over the financial system, or do you think it will be a pawn in the financial system going forward?
So my theory on this, and I'm developing this, it's in process, Paul, but I will give you my high level theory on this. And
Okay.
I hate to believe this is what is happening, but I don't see any other economic possibility. We are, and I don't want to be hyperbolic, but the numbers speak for themselves. And I am appalled at how little we are hearing in the financial mainstream media about this topic. We are, and we have entered what we call a debt spiral,
Yeah.
meaning that our interest now is growing so fast and is so uncontrollable. We're seeing both the Federal Reserve and the Treasury do things that they have never done before. For example, how much buyback of
Right.
treasuries did the Treasury do just in the month of August? I mean, we're talking about record-setting things that we've never seen before. And so there's a lot of yield control tactics that are being played out between both the Fed and the Treasury to control how much money they're able to get in and how much money they're able to spend without, unfortunately, truly impacting too much the yield curve.
Yep.
And so this debt spiral requires us to move to a new system. We are entering that spiral, and that spiral goes nowhere but a collapse. So I've been piecing together the Genius Act along with Trump's first executive action on crypto, which was to say that we would have no Federal Reserve digital dollar, which
Yep.
took all the people
CBDC.
like took all the people like me out of the concern of the government would be tracking us and we'd have no privacy. So for privacy nuts like me, that was okay. A checkbox, great, that's great. But what does that mean? That means we're going to have these third-party entities that are going to be governed by and through the Genius Act, which basically means, okay, you're going to create a stable coin, and it has to have a 1-to-1 reserve of a marketable security. Marketable security is defined as either U.S. dollar or U.S. Treasury, a short-term Treasury.
Mhm.
So what that means is you're going to get a lot of commercial entrants into the stablecoin market because they're going to charge some kind of fee or something. That's
USAT
going
just came in this week, which
they're
is
going to
Tether.
and
Yep.
think about it, Paul. What happens when you have all of these third parties going in to issue stable coins? They have to buy dollars or treasuries.
Right.
So we have $37 trillion of debt. If we are all of a sudden going to get massive commercial entrance into stable coin creation so that it can become the new way of money, right? All of those consumer commercial entities have to buy on a 1-to-1 basis for every stable coin they issue a US dollar or treasury. So it is my beginning theory that this would be how we pay off our debt.
Okay,
And
okay, I get it. We've been talking about this a little bit. I'm in agreement with this theory, because there are a couple things that are happening right now. It's interesting you go down that rabbit hole because it gets me onto other rabbit holes.
I know it's so deep.
One of them, of course, is how SWIFT is engaged into the European monarchies. So you've got the Dutch pretty much controlling, along with Brussels, controlling what's happening with global, basically global trade when it comes to interbank settlement. And the possibility here is if we do see an end around, then this starts to put a lot of pressure on Russia, puts a lot of
Yes,
pressure on China.
that's
It
their theory.
even it
I'm
even
sorry.
backs out the reverse carry trade from Japan if you think about what's happening over there.
Yeah.
Because the Japanese have also gone in this direction of a very accelerated digital economy, backing off US securities, which is going to pretty much leave us holding the bag unless we export the US dollar, which is what stablecoins is doing. So
Exactly.
I'm in agreement. I think this will be interesting to watch going forward because the opportunity here between AI and digital assets, cryptocurrency in general, blockchain, I think it's going to put the United States maybe back in the driver's seat. How long would you say, in your opinion, would this take to happen? Is it a 1 year, 18-month, 2 years? What do you feel?
I mean, certainly, normally, a massive transition like this, you could see it taking 2 decades, right? However, what I will tell you is the systems are already there.
Yeah.
Everything is already built, Paul. I mean, I literally went to a concert with my daughters, and one of my older daughter had a couple of friends with her. She was on one side of the arena, and I was on the other side with my daughters. And I only brought one credit card, and she wanted to buy stuff, so I gave her the credit card. And then I'm
Yeah.
realizing, oh no, how am I going to buy me and my other daughter anything? And then I realized I had my phone on me, and
Yeah.
so I just Apple Paid in the stadium. The systems are there for
Yeah.
stablecoin. It can be turned on so easily. And so
Listen,
you're
if Apple or Google turn on stablecoins, Google, of course, announced, their integration into their AI tools, which is where I think search is going to be going, and how they integrate payment, much like what TikTok has done with TikTok Shop. They've done a really good job on integrating payment. You've got, of course, Stripe implementing cryptocurrency, PayPal already doing it with their own stablecoin,
yeah,
PYUSD.
exactly.
So yeah, this is definitely going down the pipeline. You got a lot of advances moving in this direction right now. When you're talking about investments to your high net worth individuals, do you say, hey, lean in? I'm sure it's diversified, but do you look at AI, crypto, and all? And when I say AI, I would include the Mag 7, so Nvidia, et cetera, in terms of securities,
Of course.
gold, which is now getting more active on the tokenized side of things with XAUT, PAXG. Both those tokens have continued to fly along with gold's price. Do you think that that would play into an opportunity to, especially for gold and treasuries, to be backed by gold securities, as well as what we're seeing in terms of just the traditional infrastructure around finance? What is that going to look like, I guess, in the near future?
I mean, there is no doubt that the AI, crypto, quantum computing, robotics, those four technologies are the fourth industrial revolution, in my opinion. And finance and this financial system is the future. We are moving to third party stable coins.
Yep.
We are going to be transaction in third party stable coins. They are right now, based on the Genius Act, have to have a 1-to-1 reserve of US dollar, US Treasury. But at the same time, we can't make the US dollar and US Treasury underneath that not worthless, but
Yeah.
worth less, and it keeps going down in value because the system right now is not around a gold backing. As if when the dollar came out, the dollar was the tokenization of gold back in the day of
Sure.
paper, right? We
Yep.
didn't have computers, so we represented gold in paper currency, and that was the tokenization of gold back in the olden days without digitization.
Yep.
Digitization means tokenization, which means, okay, we're tokenizing we're deriving this value of this token on an underlying asset. What is that asset? Gold. I'm 100% with you. Building an entire system on the back of the US dollar, which will actually be replaced by that same system, is a little bit ironic. And so this
Yeah.
is how they're debasing the dollar. It's what we have to do at this point.
Well,
We cannot repay our debt. It is a mathematical impossibility without some new quantum thing happening. It is
Well,
impossible
yeah,
for
the
the United
productivity
States.
would have to be off the charts.
Exactly.
Something that is not even looked at. I
Because
mean,
we keep borrowing more, Paul. We keep
yep.
borrowing more. So how are we paying back when we're continuing to live beyond our means every year? We're mathematically not going to ever pay back this debt.
You look at what Trump is doing. Here was his tweet from this morning. I'll bring it in real quick. He basically said, "Hey, listen, we're getting ready to get another 17 trillion. That's trillion, guys. 17 trillion invested in our country this year." Now, I don't know if he's talking 25 or 26, but point being is we've got what appears to be a very accelerated economic opportunity. Does this change your opinion at all?
I wish it did. I mean, I love that he's going out and getting foreign direct investment and all these partnerships. This is great,
Yeah.
great, great. Like I said, he's like the sovereign wealth fund, which is like the taking on a percentage of ownership in Intel and getting a share of the chips that are being sold to China eventually when Nvidia can resell the chips into China.
Yep.
H20s. I know that obviously Wang wants the Blackwell chip to be a part of that deal as well. So Trump is already doing such different things outside the normal pure capitalistic
Yep.
model, but it's because it's now required. I mean, a lot of people get upset and say, why is this isn't free market capitalism? Well, that ship has sailed. $37 trillion means we don't have a free market capitalistic system, or we wouldn't be in debt almost $40 trillion. So
Right.
yes, Paul, every direct investment makes a difference. Is it going to save us? There is nothing that can save us at this time unless we move to a new currency and we somehow debase the debt that we have.
Nothing saves us. That sounds like a new T-shirt. Nothing saves us. Digital assets.
Yeah.
I like it. And of course, Trump's out there, of course, stoking the flames because he's saying, "Don't worry, stocks are going to do much better as time goes by." So he's definitely out there chanting right now that the markets are still on fire. Where do you see this ending in terms of the uptrend and cycle we're in right now? S&P 500 all-time high, gold all-time high, Bitcoin approaching its all-time high, possibly altcoins and other major digital assets breaking out like crazy right now. Where does this end? In 2026 or earlier?
Well, it is, monetization is the problem. Anytime you are at the early stages of a new technology, and I know people say it's not comparable, but .com is the most comparable I can have from a technology perspective. So we had these obviously irrational exuberance. That speech was given in
Yep.
1996 by Alan Greenspan. We
Yep.
didn't get the .com crash until obviously 2000,
2000.
2002. Right. So that was a 4 year in advance. We are at the precursor again of all new time highs, but we have not yet really monetized. You cannot say ChatGPT on your phone is monetization of AI into your daily life. As we monetize over these next 3 to 4 years, we will get some pullbacks, and then we will get some, we'll break through that and we'll get a new high. We'll get some more pullbacks, we'll break through. So it could be ugly and rocky, but it is the one opportunity that I think exists to get us out of a complete and total debt collapse.
Yeah.
That this is the only chance that we have to navigate through an entire debt collapse. So we have to take it. And I do think that right now the market is a little bit irrational because it's not implemented and monetized yet. And monetization always means pullback. So as long as investors understand that we are on a 36 to 48 month implementation and monetization period that
Yep.
will and sometimes be ugly, then that's okay. They can adjust their risk tolerance and understand what we're going through.
Yeah, I mean, unfortunately I got a chance to live that era when I was a young engineer and growing up in Silicon Valley. We saw that era. We were designing apps of all sorts, and to your point exactly, monetizing blockchain, AI tools, etc. All of that is coming in the next few years. The fact that we have the government now out of the way with a pro
Amen.
blockchain government.
Yes.
Because if you look back at the birth of the internet, the government kind of stood back and said, "You guys go, see what you make of it."
Yeah.
Fortunately for the world, that occurred, and maybe now, fortunately for the U.S. dollar, or at least the American, um, you know, confidence, I think, in terms of becoming whether it's the global reserve or if it is a new digital asset system that kind of becomes that. That's the thing that is so complex right now, how they're going to be able to pull this off. I know Scott Bessent, smart guy, but
Very
this will
smart.
be a very important 3 years
Yes.
remaining as we go
Absolutely.
into this. How do you think this plays out into the midterms? Because whether you look at left, right, obviously there's a lot of heated tensions right now, but the issue, I think, around midterms, if Trump loses control of the House, does it slow down this train at all?
Thank goodness that he will have most of his appointments already set. I know sometimes things change, but for the most part, he's gotten through, getting all of his people in place. And so even if the House were to change hands, it would make it more difficult for him, no doubt, but it wouldn't be like the end of all the progress that he's
Yeah.
really able to start in these first 2 years. I would just say that right now, if you look at just his overall job approval and you compare that to Biden, Obama, Bush, he's actually one of the highest job approval ratings we've seen for this stage of a presidency. So what that tells me is that he's getting more general, broad-based consensus overall for what he's doing. And even though the economy is having some struggles and the labor market's getting ugly, I feel like there's more consensus around his economic philosophy that it's
Interesting.
turning. It's the prognosticators that freaked out in April and said we're going to have massive inflation and a horrible market, and people sold out of their positions and missed the rebound and the gain, and they were really mad at the news. Those people are starting to believe in what he's trying to do. And as long as this time next year, where if he's got that same approval level and things are moving in the right direction, I think, and maybe the credit card rates are a little bit cheaper and the mortgage
Yeah.
rates are a little bit cheaper, I think that he will be, if it was to happen today, I think he'd be in a good position.
Well, and the other thing is they have to spend the job numbers, in some
Exactly.
way. They got to get these job numbers slowing
Exactly.
in terms of job loss. And if they are able to pull that, as long as interest rates are coming down and jobs are coming back, if we have higher than inflation, because I know your position on that is we'll never go back to 2.
No.
So that may be palatable, for the American voters. So definitely a good one. Listen, we're definitely going to have Rebecca come back in. She's now one of our favorite guests to come on the show. So thank you so much, Rebecca, for coming
Thank
in today.
you.
We appreciate it.
Thanks for having me.
You guys stick around. We're going to be covering some additional stuff, look at some charts, and give you some insights into the next leg up for a lot of these digital assets. We'll be right back. All right, guys, we're back in. And of course, this is interesting because there's a lot that is starting to transition right now on how the market could be responding to this quarter basis point cut. And I would agree with what Rebecca is saying. We're going to get 2 more. The October and the December meetings are going to be very critical. This, I think, is going to be a position that we're going to see over a short period of time. The one thing that I am a bit concerned with right now, of course, is what we're seeing in terms of the heated nature of the left and the right. And if you look at Charlie Kirk's death, of course, now the White House is starting to target progressive groups. This is a concern for me because it does start to push into things that I think are not necessarily good for not good for investing in general. And that would be my only black swan event. If we do see a movement that is now starting to go in this direction, do we see people pull back from finance? Here is a clip. I want to share this with you guys. And take a listen to this, and you'll kind of get an idea of just the scale of what is going on right now. Let me play this one.
They have signs, and they're all professionally made. Real protesters make them in their basement. And they're all the same.
So who's behind it? Do you have a gut feeling?
You hear Soros. I don't know. We're going to find out if he's behind it. But it's incitement to riot. That's a criminal act. And people are dying because of it. So it's really, it's death. So we're gonna find out, and it should have been done a long time ago.
You can see the issue right now is starting to get into an issue where we're now starting to see mainstream media being affected. Again, this starts to move the minds of Americans, and right now, Americans are what is driving this market in general. So just understand, this is the only, if we are going to see a black swan kind of time, this could definitely be it. Other things that I want to kind of focus on right now, of course, is what's happening in the news around XRP and also just in general around digital assets. And we'll go to the charts here in a second. We'll take a look at that as well. Let me show you guys this story, which is a good one. This is DBS, Franklin Temple, and Ripple are now teaming up to launch tokenized lending. This is a big deal because this is a lot more of, I think, when you look at Ripple in general, we have not seen a full move into tokenized lending. And the fact that this could be the case, I think we are into a very interesting point of where Ripple could start to accelerate directly. The point right here, of course, is the trio signed MOU. This is a memorandum of understanding to help investors better manage the volatility, shift funds between stablecoins and yield-generating assets, which means RLUSD. So get ready. You can see it right here. DBS, a tokenized version of Franklin Templeton's U.S. short money market fund, is now going to be able to go along RLUSD in terms of asset settlement. So this is a big deal, moving again Ripple into the front line of what we're going to see in terms of future. And as we look at not only that, along with what is going on in the market in general, the SEC, of course, approved Grayscale's digital large cap fund for trading, which now includes cryptocurrencies, Bitcoin, ETH, XRP, Solana, and Cardano. You also have the issue coming in right now where the Rex Osprey, Doge, and XRP ETFs are officially trading. Those are live today as we record. We're going to drop this video out there. But point being is you got a lot of movement that is very positive. And then not only that, you also have movement within the stock market. Intel has started to break up because now NVIDIA is announcing a $5 billion investment. Interesting that they are going the route of Intel, in terms of possibly a chip manufacturing alternative. So point being is that we're going to see some movement here, I think, overall. All right, so let's jump over into the charts real quick. And one of the things I want to kind of focus on in terms of where the market is trending, obviously we've got a little bit of an uptrend right here on Bitcoin. If you use our MSI indicator, which by the way, you guys can get this by just visiting our website, paulbarronnetwork.com, get in the Forge membership, and you guys can jump in on this. This is an invite-only script. It is this one right here. And once that's implemented, what it will do is it will give you guys basically real-time sentiment data that we measure on the actual asset. So right now we've got volume sentiment holding in. Let me kind of zoom in on that for you guys so you can see it a little bit. Volume sentiment zooming in right now on about 52.42. Net volume sentiment is up to 70, which means high trade. And then overall, if this gets above 60, I anticipate we would see a pretty significant move on Bitcoin going forward real quickly. If we take a look at some other, of course, XRP starting to go up on the day. This is on the 4-hour right now. And this is what I'm talking about in looking at the volume and the trade sentiment on XRP, both volume and net volume exploding. Overall average, we are about ready to cross over a 60% overall average. And I think that is another factor going into a potential uptrend. And let's just take a look at this uptrend right now. Look at this movement right here. If we go to that top right there, a nice 5% over the last couple of the weeks. Is this the breakout that we have been waiting on? I think we are in a position right now where XRP might be on the cusp of a big breakout here, maybe going up to $10. We'll see how it goes from there. ETH, of course, starting to also play into this. I think when you look at Ethereum in general, one of the things that I think has been with Ethereum, and I'm going to bring this in a little different limelight right there. If you look at ETH, again, it's been climbing, coming out of what was that bottom right around 40, what was that, around 4,400, now tracing at a high of almost 4,700 right now as we are recording this, 4,600 on Ethereum. Solana also is moving up to back to 248. You've got Cardano moving right now. Almost the entire market. SWI, of course, has been very hot, holding at about almost 5% uptick right now, starting to break into the $4 range, which I anticipate we're going to see some big news on that. Avalanche, another monster move with Avalanche. So all of these very, very positive going forward. And then, of course, Pengu took a breakout. If you guys didn't buy Pengu when I told you to, what are you doing? This was an opportunity to grab Pengu right there and eat up a nice 35% move just since the 7th of September. Guys, that's 10 days ago. This is the kind of thing that you're going to find here on this channel and more. But the key here is we bring a whole center around what's going on in crypto. We don't necessarily pump Bitcoin or Ethereum or XRP only. We look at the landscape. And I am a technologist, so I understand one thing, and that is that technology is shifting the game. Blockchain is at the front of that spear, and digital assets as a whole are the only thing that is going to make this work in terms of future generations. So if you're not in digital assets and really pumping into the market right now, all I say, guys, is get in, because it's going to be a big one for sure. And what I always talk about is this whole issue of the American dream. Is it dead? And I believe absolutely, as we talked with Rebecca earlier, this is the time where digital assets, I think, are going to supplant traditional assets for the future. Granted, yes, real estate's still going to be good. I think we're still going to see a lot of gold movement. And I do think, in general, the opportunity for younger people is going to be in the digital asset space. That's why you're seeing these memes absolutely go nuts. It's also why I think you're going to continue to see the movement that we're seeing in the market right now as we're trading on a big green day out there. Again, if you're not subscribed to the channel, make sure and do that right now. It is one of the things that you can do to repay us for the time and the effort. And if you're not over on Paul Barron Network, guys, what are you doing? Make sure and jump over on the Diamond Circle at just paulbarronnetwork.com. You guys can find us over there, and it's a great place to get additional content from me. I do a Barron Market Edge email out there, which is a weekly that drops into not only what's happening in the market, but my visual of where I think the market could be going and some of the strategies that I'm taking. All right, guys, we'll catch you next week. Take care.